Did you know Warren Buffett made billions selling puts? What is it that Warren Buffett knows that you need to know? Now, here's the kicker. Small investors actually have an advantage. It's not easy for Warren Buffett to find a counterparty to do 50,000 contracts, or at least not to do it at a good price. What you want to think is that you as a small investor are like a speedboat, and large investors like Warren Buffett are like a big barge in the ocean. And everyone sees them coming. You as a speedboat can do donuts around the barge. The bottom line is that you have flexibility that the large traders don't. You just need to find your edge. And this is what you have to figure out is, when do you sell a put? How do you do it? What do you do it on? What price do you do it at? How big of a position do you take? How do you manage it? The key is in understanding how options work. Let's just dive into selling put options. When a put seller sells an option, it is an obligation to buy the shares at a specific price over a specific period of time. I specifically want to highlight trades that he did to give a clear illustration of the strategy that Warren would use. First, I want to focus on Coca-Cola, one of Warren's most famous holdings. Back in April of 1993, he sold 50,000 contracts of put options, which obligated him to buy 5 million shares of Coca-Cola. This was in April, and he proceeded to sell a December 1993 $35 strike put with close to 8 months of time on it. He received a $1.50 premium per share. That was a $7.5 million injection of cash into his portfolio. Let's break down the obligations that Warren has committed to. Come December, there are really only two outcomes. Either A, the puts were never assigned and they profitably expired, allowing him to keep the $7.5 million as income. The second scenario is he was assigned and he would be forced to buy the 5 million shares of Coca-Cola at an average cost of $33.50. That average cost is because he had an obligation to buy it at $35 and he earned a $1.50 income premium, that's $7.5 million, that was paid to him. That's his to keep no matter what. So was the strategy that Warren did dangerous? Was there a huge risk to Warren? No, he actually was prepared to buy the shares, and he used the put options as a strategy in order to accumulate the shares at a favorable price. The key here was that the option strategy was a tool. It was a tool for him to accumulate stock at favorable prices and the conditions that he wanted to do it. So now listen, here's the key. Selling puts is not risky. So where does the stereotype of put options being risky come in? And that again is the leverage. If you turn around and buy a whole bunch of stock on margin, or you highly leverage yourself in the futures market, then the volatility of the market can cause big volatility and huge drawdowns. It's no different than if you turned around and had a $100,000 account and you sold $500,000 of potential stock obligation purchases in that account. Well, you simply don't have the money to buy all the shares. So it's the puts that are not risky. It's the leverage. So the real question is, how do you manage your leverage, or should you use leverage at all? A common question is, what kind of returns can you make with selling puts? And you want to remember that returns are directly correlated with the amount of risk and volatility of the underlying stocks and the leverage you're willing to use. You can easily add a few percent of return very conservatively with some strategic put writing, or you could be targeting 30, 40, 50% returns a year using high amounts of leverage and risk. It's not a right or wrong question. It's about learning how to use this as a tool and choosing how to fit it into your portfolio. The key was that Buffett saw the option not as a risk, but as a tool. And if you see the option as a tool, you too can use it to make income and cash flow. Listen, we're stoked about making more of these videos, and we're going to keep pumping out all sorts of great stuff for you to help educate you on all of these great strategies.